Watch out, buddy. Oh, jeez. What's up, everybody? Good morning. All right, let's see where we are. Opening soon. Indicator. Oh my gosh, indicators are gone. We are opening soon. So here at 8:30, we run into that new week opening gap. Indicators are gone. I'm hearing an echo. Why? Okay, there we go. Okay, just real quick, right? I would kind of expect we closed above that 4 hour, so I'm really wanting to see if we're going to use that to attack a high in the short term. So let's see how price opens up here quickly, and then yeah, we'll keep on looking. This is previous day high already, so we've already cleared yesterday's high. Kind of had a lot of overnight movement. Right, new day opening gap here. So the overnight session kind of already really extended us, clearing yesterday's high. So we're going to have this regular trading hours gap opened. But yeah, for the time being, I just want to see if we can't run out some short-term highs. And then maybe we can look for maybe a retracement lower. Wouldn't mind that. Try to get back into yesterday's range. Sign into this, so we could run. Cool, all right. Good morning, good morning. Currently inside a 5-minute bullish fair value gap. Right, it's already turned inversion, so I'm kind of just watching. Not too big of a rush here. This is the 5-minute fair value gap right here. I've overlaid it. Gonna leave a volume imbalance here. Might already be kind of nice to look for shorts. But remember, we're inside of a higher time frame fair value gap. Let me kind of pull this out a little bit. So all of this is taking place in the higher time frame 4 hour. Right, we trade in the consequent encroachment once, we trade away. And now we're trying to get back below that. So that right there is pretty bearish. As we said, holding the 5 minute. 930 runs up into that premium. So if we close this candlestick bearish, which it looks like we will, I really want to see volume balance that's paired with the consequent encroachment of the 4 hour right there. No fair value gap or anything yet, but that in itself wouldn't be a bad idea. A quick run lower. Maybe we could try that. Let's see. I like fair value gaps in the morning, but volume imbalances aren't too bad either. Just going to see how much it'd be if we were to do something like this. 1 to 3, okay. So we tapped that perfectly. I wanted to use the 4 hour consequent encroachment ideally. We didn't clear those lows yet, okay. So yeah, I wouldn't mind, we may try to look for something short here. Right, understanding large new day opening or a RTH gap. Price is going to want to kind of dig into that displacement candle. We respect that. Breaking a 5 minute inversion. So I don't mind that. We'll try a little short here quick this morning. Maybe at least to the low of the 4 hour fair value gap. No fair value gap has formed, so this will be a volume imbalance entry. Move that. Right, and this is with the understanding. So kind of the backing of this trade. Utilizing this 5 minute fair value gap here. That was bullish. We overtake that, right, creating an inversion. You'll notice how then none of the 5 minute candles can get their body back above or even near that 5 minute. So we hold there, we then break lower, back below previous day high. So now we've already cleared the previous day's high. If we want to return into yesterday's range, we would start looking for a sell-off. Right, I like, once again, daily volume imbalance will tend to be kind of a strong magnet on price. ES or NQ has already cleared this low, so we may run into an issue where, right, SMT, but I like the idea of trying to get into that low here. So that's kind of what we're going to be looking for, working with. Want to see if volume imbalance paired with the 4 hour consequent encroachment. Can't hold us bearishly. Attack sell side here, sell side 1. And then additionally, we want to see 4 hour fair value gap low. And then final target for us will be, we'll go midpoint if we want to run that low. Tyoso, it was good, man. In theory, I was never really away from the charts, just kind of away from streaming, so at least that's one good thing. I still kept up with the skill set. We get tagged in there, so now we're just waiting. See if we can't get any movement lower. A lot going on, so we're gonna hide the indicators, just rely on the drawings for now, because we really know what we're looking for. Let's hide some indicators. Make it a little easier for us to just follow along in price. So in this case, my stop loss is basically going right above, right, 1 tick above the 5 minute consequent encroachment. Because in my mind, after creating the inversion, coming up to the high, tapping consequent encroachment even, and then breaking away. If we're going to retest consequent encroachment, we're either going to spend more time in this or we're going to try to overtake that, right? So at that point, we could be out. You could always do the old classic 5 handle, yeah. Just to get prove a point, right? Always pay yourself if you can. So we're gonna go just one contract off over 5 handles. You guys know I'd like to secure payouts. Pay the trader. So we'll go partial there. All right, we'll make that partial if we can get into it. Once we clear that low, we're gonna have to wait and see if we clear that low. I guess I don't want to be too certain, but I like the idea of getting into that low. If we can clear it, we're gonna see how the candlestick closes. Okay, if we close back inside the range, that's not really a good sign. If we close outside the range, we can expect at least a little more downward movement potentially. I like that the body was unable to get into the volume imbalance. So if we can close this bearishly, especially under some lows, what just happened? Hello? I'm guessing we got tagged. Okay, just a little laggy there. That was interesting. But there's that partial. Okay, there's that sell-south liquidity. So pretty obvious target there. So now we want to see, do we continue? Ideally close below. That's what we'd want to see. At this point, closure below means I'm comfortable moving stop loss in half. So we'll basically take a partial and cut risk in half, which secures us even more profits. Bearish volume imbalance is good. Closure below the low as well, kind of confirming that we're willing to leave the range and continue lower. At this point, either want to see fair value gap get created where we broke through this, or if this candle does tap it, a quick rejection. Right, because that'll give us an indication that price is willing to continue lower if we're going to create premiums as we're breaking through these levels. All right, so if we left a fair value gap there, that would be good for us. As we said, our target will be, do we redo? Fair value gap gets left open. We're gonna go ahead and target, hold on, I'm gonna bring back the indicator real quick. Midpoint, yeah, we'll go midpoint. So we're expecting price to dig a little bit deeper into the daily volume imbalance. Let me go ahead and, just so you could see the actual markings. Cool, there we go. So daily volume imbalance, retracement into fair value gap. Partial already secured, so we need to hold this. Okay, if we overtake that, as we said, we don't want to see price return really up into this volume imbalance or the 4 hour. We just want to see continued bearish delivery into the low of the 4 hour fair value gap at least. After hitting the 4 hour fair value gap, then maybe we could bounce, but I don't want us to tap that first. At the time, we're going to be being held by the, yeah, this is probably the quarter level, what we bounced at, like just eyeballing that, right? If we're going to take midpoint. Yeah, so we're hitting that quarter level. Accelerating back higher. We'll see how that closes. We don't want that to overtake. If that gets overtaken, right, not a good sign. So we close back inside of it, which is good. We do give up its consequent encroachment, which I'm not too big of a fan of, but for the time being, we're gonna go ahead and leave our stop where it is. As you said, we've already secured a little bit of partial. So if we want to run all the way back up here, get stopped out, that'll be a break-even trade, and then we'll look to see if we can't find another entry. Ideally for us, we close in that bullish fair value gap and we actually close back below this. But it looks like we actually want to use that as support to close above it. So if that's the case, that's more bullish. And we can actually maybe even flip our bias and try to get a short-term run higher, right? Because now we do have kind of a lot of highs behind. And as I look at price here, I notice that we have an untapped fair value gap above. We can retest here, but that's why we're not necessarily moving to break even. Had we tapped daily volume imbalance or the fair value gap low, then I would have went to break even. But this in itself, to be honest, we might close one more here because that is a bullish, basically, flip. Right, we've overtaken the bearish fair value gap and the low, leaving behind a premium, or excuse me, a discount volume imbalance. So what I'm watching to see now is as price returns into this inversion, and especially if we tap that volume imbalance like we just did, what kind of reaction are we getting? Right, you'll notice how as we tap it, we immediately move away. I want to see price willing to really overtake that, which it looks like we did there, which is good. Okay, did we? Yeah, so we're able to close back below. Now we want to see price overtake the bearish fair value gap, reclaim it, use it once again, just continue to deliver us lower. All right, so that's not what we would want to see at all. One candle negates the previous candle closing below it. We immediately open with the bullish volume imbalance. We hold perfectly. Right, look at the precision. Close back above. So now if we are bullish, right, more than likely, if we're going to tap this, we're going to run higher. Open up the chart a little bit more for us here. All right, got the 1 minute up here, got the 5 minute here. I'm almost tempted to flip this position, to be honest. I'm really tempted to flip here, so instead of doing that, right, what we're gonna do is just wait. Commit to the idea. Don't need to be wishy-washy. What we will do though is we're gonna close one more. So we're gonna buy that back. I have no issue with cutting risk, especially when things are not presenting how I would expect them to see, right, based off previous information. So if we're gonna keep holding this, I'm just gonna offload that one contract. So partial here, cut risk here. Now we could leave the stop loss all the way back up here. And we're not necessarily worried because if we do start running, right, we may have another opportunity to try to get in, which at that point we'll look for it. But yeah, we take what the market gives. If we can displace below this low, we can go ahead and finally move our stop into profit. Still interested on that volume imbalance. Okay, we continue to reference this little volume imbalance in here, right, with the bodies. Shoot, if we can get below that, maybe able to actually something like that, maybe. Nice. Okay, so we do get the closure below. It'd almost be valid to try to trust, right? If we're going to trust, that's bearish. We could be wrong, but because we've already closed some and we've partialed, I'm actually going to go ahead and try to use that again. Okay, so we're going to go ahead, basically add back that one. Now at this point, because we actually have gotten underneath it and closed again, if we come all the way back up here to where we entered, I'd rather just be out of it completely and then reassess for a potential second entry if that's the case. Right, because we've closed above the inversion, we've failed to run back into the original volume imbalance, which is good. Getting stuck here at this up close candle. We've then closed back below the fair value gap. So now at this point, if we do want to run, right, we shouldn't be trying to get back above it and basically just continue to consolidate in here. We would need to tap that, then break away quickly. So that's what we'll look for. NQ just ran this low, so I'm not really gonna say that's SMT at this point, just because we're still expecting bearish movement at this time. Just want to see if we can't tap that. Oh, it's not gonna give it to us. That's fine. If we close below this first, we'll still wait for the retracement, because then this will be the actual parent leg, right, that has broken. At this point, really no market structure shift. As we said, we want to see closures below lows to indicate price is willing to continue in that direction. Same idea here, right? That's why we went short. Closing below indicates that we have at least another opportunity to head lower. So we may miss that second entry. Let's see if we want to give our retracement. As we said, after closing below this low, we then could retrace. So I'm not necessarily too stressed out. If we miss it and price runs, that's fine, right? We still have one contract in and we'll be able to participate on that. So yeah, so far so good, sitting nice. We'll do this just so you guys can kind of see as well. Okay, that's fine though. Let's see if we just get taken out. Oh, we didn't get taken out. I still like this. If we fall short of the volume imbalance and retrace, I'm still going to hold that and try to get into that trade there. Because remember, the whole premise of this is that we are reaching for midpoint of the RTH gap. High likelihood that price wants to tap that, even if we're going to run higher. So with that understanding, right, I'm simply aiming a little bit above that in the form of that daily volume imbalance. This again, I'm going to put this here just to show you guys where RTH midpoint would be. Capitalize. Why can't I capitalize? So it looks like we're about to run straight into it. Once we do, my attention will immediately go to this. I'm already looking at this, but I want to see if the same thing happens here that happens here, basically. Coming off daily volume imbalance, will be a lot more willing to look for longs. Right, we weren't necessarily trying to long this inversion here because we still had lower objectives. Whereas now, if we're going to invert, that's, to me at least, more indication that we do want to flip bullish. We fall short of this again, however, so at this point, don't want to be greedy. We're going to move our stop loss right to the low. As we said, our attention is inside of this bearish fair value gap here. So what we want to see now is price hold this and attack our low, get us out. And then if we are bullish and want to see some type of reversal, we would expect that this fair value gap here then gets overtaken. If it gets overtaken right now, I wouldn't necessarily be too big a fan of that. We do have this, and we have yet to tap into that inversion. So I'm just debating if I want to leave my one in and allow for that deeper retracement, which I think we will. Right, this will kind of be an OTE entry, so kind of overlaying other concepts here. Right, you take the highest high, body-wise, down to the body low, and you'll notice how, right, the white level here is our kind of golden zone for the optimal trade entry that aligns perfectly with the inversion. So as I see something like that, I'll be okay actually leaving this and trying to catch that if we're going to go up higher, simply because we haven't tapped that daily volume imbalance. We are weighing kind of all our options, right? We are coming off of this. Don't forget, we've hit the low, but I think the volume imbalance is the actual objective. Beautiful. So let's see if we can't just run that out. Right, we get into the high. We don't close above. That's good. So yeah, just looking for a run on this low. And then if we were to accelerate through that, we'd actually flip and try to go long. So we'll see if we can get that. One tick low. Bearish volume imbalance. Want to see that remain open. Right, so we can tap this candle's close, but then want to see another bullish or bearish, excuse me, candle. Look at that precision there, dang. Could have used that, but oh well. So I love volume imbalances, so precise. And they give us a good info of what we can expect. As we said, don't want to see this close. Close that in with a bullish candle. Not ideal. Still have a chance of going lower, but to really cement the idea that we will clear out these lows, want that volume imbalance to remain open. Oh, okay. So not favorable for us. It does exactly what we said not to do. And even in that case, right, you notice how it closes where? Perfectly. So it closes in the volume imbalance, exactly. This is a hidden volume imbalance though. Right, but it's now not something that I can necessarily rely on to hold us bullish or bearish. Keep saying that. That's the difference. What? So even though it's hard to see, right, from where this candle closed to where this candle opened, this still is a volume imbalance. So now we want to see this really hold, send this lower. We weren't able to leave it open, so a little less likely, less probable, but still the same idea. We can move. I don't really know if I want to be. No, I still will. As we take a look at NQ, right? NQ was able to get into its midpoint of its RTH gap. So it's already reached the objective we'd be reaching for. But I think ES can get there still. I think it's just playing hard to get. Patience, patience. Ooh. So that 4-hour low here is really holding us. Right, remember that's kind of what we're hitting. But to have a bullish volume imbalance. As we said, we've yet to come into this as an inversion, so yeah, we're gonna leave that one entry there. Understanding we have inverted this, right, but sometimes to create these bearish moves, we have to go bullish and invalidate bearish PD arrays. So I still like the idea of holding from the inversion and the original kind of break in structure that was created here at this low. And at this point, right, above that will be out. Because now at this point we have an old low that should act as resistance. We have the inversion that should act as resistance, and we have the inversion volume imbalance as well. So that could be your 3 PD arrays, right? To where if we're going to blast right through all of those, more than likely we're off sides. So at this point we could actually just go break even. I'm fine there. And that's why I'm okay taking this entry, because right, we've already secured profits, and our original entry allows for this entry to go against us without actually taking a loss. So in a way, it's really a free trade, right? Because now if we get stopped, If anything, it's slightly in profit. So we'll still end with a profit after taking partials in profit as well. If we're off sides, right, and we just blast straight through that, that's fine. And we can look to try to maybe capture something on the run higher. But for the time being, let's see if we can't get one more stab lower. There's the volume imbalance. That really would be the max I'd want to see. Right, granted, we're allowing it to get to the high of the fair value gap, but I don't really want to see any higher than the volume imbalance itself. Close right on it. See what these next few candles want to do. Right, because now bullish fair value gap, bullish volume imbalance. Excuse me, jeez. For us being bearish, we want to see this bullish fair value gap be invalidated. We want to see price trade right through that, close below that, and attack. Oh yeah, okay. So we don't want to see this hold us, right? We're not wanting to watch. We want to close below both of these. We definitely want to close below this at least. We don't want to wick into it and then close above both. That's a no-no. Closure below both, that's good for us. Cool. Okay, so now at this point, right, we could easily go in profit right above that fair value gap. As we said, we didn't want to see any higher than the volume imbalance. I really still don't, so I'm fine even going like that. Boom. So there we go. So now we wait and see, can this entry here accelerate us using these inversions that we've created to basically run into a low. Understanding how aggressive we've been holding at this 4-hour low, I am going to try to take one off there, right? So this entry up here that we took, we can offload here at this 4-hour low, which will be nice. That'll give us a nice 9 handles, right? Plenty of us. Which then will allow for still the original position here to try to run into, wait, 1, 2, I still like the high right there. So here's our current framework. All right, relying now on this inversion really more than anything. Notice how we've overlapped that with a bearish, so we need to definitely hold this. At least touch this low. We're gonna go one tick above. Right, if we're gonna overlap and create a bearish inversion and then immediately stack a bearish fair value gap along with it. Strong bearish signature, we should see price push through this volume imbalance. You'll notice that's really what's stopping us to the tick. Look at that perfect delivery. Wicks are hitting the hidden volume imbalance, but notice what the body's just standing on. Bodies are holding at the actual bearish. So pretty ugly there. If we get back above this fair value gap, more than likely we're looking for a stop out. Yeah, we overtake both of those immediately. So that right there, not a good sign, right? Showing that it's really not willing to hold these PD arrays. Still tempted that we want to get this low. I might. Do we give ourselves some grace? Yeah, I mean, we already took profits, so I'm just going to go straight to break even. Just in case, right, we want to tap this consequent encroachment one more time, or this volume imbalance. I'm not already a fan of just how we're moving in here. We're creating a lot of PD arrays and not necessarily stacking or holding to them, which is why we're relying on that original low and then this fair value gap here. Right, you'll notice this fair value gap is actually the first presented fair value gap as well, which is why I'm putting so much emphasis into it. Right, following the 930 open. We had the volume imbalance where we entered on because we understood we could use that, but as far as fair value gaps, this is the first one that was presented. So we now overtake that, perfectly fine. Right, we get closed at break even, slightly in profit after securing profits here and here. So overall, winning trade. And now we'll wait and see, is there a chance for us to maybe get back in to target these lows, or is price going to flip over and really try to attack some, right, untapped inefficiencies here, or some highs that were left behind inside the 5 minute. for the time being, let's kind of clear up some of this so we don't get too lost. Okay, I like the volume imbalance. Not necessarily worried about the old low, even though we are using it. So we're going to watch and see. We've closed above the volume imbalance, okay, that was holding us. So we want to watch, does that offer us support? And now if this candlestick closes back above the actual bearish fair value gap, that to me is a little more bullish. Right, whereas opposed to here, we weren't as bullish because we still had lower objectives. Now that we've actually cleared that sell side again, hit the low of the 4-hour fair value gap, if we do get back above the first presented fair value gap here, I think we try to use that to go long. Which granted, right, I guess I don't care too much what happens. The original bias was I want to see these lows. I still want to see these lows. So we can say that ideally, right, I would still hold on to the idea that we attack these lows. But it's always nice to be prepared, right? Never want to be confused or thrown off. We understand if we close above the fair value gap, the idea of us running into these lows kind of got to put on the table, right? Put it on the side for at least the morning. Hey, no problem, Scotty. Glad I could help, man. That's all we're trying to do. Help you while helping me. Like I said, I like this because I enjoy talking out my thoughts, right? It kind of makes you be more concise. Makes you be confident, makes you really understand what you're doing. So it's a win-win. This right here, right, in theory, short-term high cleared. All right, let's look at this, okay? I don't have the second time frames, unfortunately, but from this low that we created, that's one swing high. Higher low, that's two swing highs. Higher low, that's a third swing high. Three swing, okay, hold up. All right, with the idea that I still want to see bearishness. So yeah, we're gonna go back in again, like this. Bang. One more try. We'll go half risk. So now still wanting to hold true to the idea that these lows are the target, right? We have equal lows here. We have relative equal lows here. We have the daily volume imbalance. We still have the RTH midpoint. 3 drives into the first presented fair value gap. Unable to close bodies above that fair value gap. Trading back below the volume imbalance and then holding with its bodies to then close back below the fair value gap. So to me, if we're going to trade back up into that, we should hold and get lower. Right, once again, phantom trend line as well. Okay, so retail traders, oh yeah, we're stacking in longs here. Maybe give a fake bounce into the fair value gap, one more, and then boom, right, wipe out all the lows. At least that's our, that's what we would look for. That's kind of our expectation. We'll move the 4-hour back again. Bearish fair value gap there. Well, the 3 drives looks like it'll go okay. If we can hold this low and then give a retracement, I really like that. If we run out this low first and then retrace, that's a little more iffy in my mind because now we have cleared sell side, so we can flip a little easier. But if we were able to hold another low, right, and just kind of continue to engineer and stack that liquidity, I'd like that. So we do end up clearing the low first. We'll see if we want to get into going to be a wick. So we actually just wick that low. Yeah, I'll leave this one here. I'll commit to this. We're also in a daily fair value gap. How can we use the 4 hour? Oh, we're gonna get that low. I'm using the 4 hour. One sec, I just want to see. Yes. Oh, okay then. All right, well, that's fine. Right idea. Right, we get stopped at break even first. As we said, already secured our profit, so that's fine with me. Once again, I just like knowing that we are on side and that our bias is correct. Right, so we stab right into all the lows. The one entry here would have been the volume imbalance, right? So as we close off the high, right as this candlestick closes back below consequent encroachment, you could use that. I wanted to use the fair value gap itself. We simply just don't get that, right? So instead we break away, and now we attack all the lows. So now I'm interested to see, do we want to turn over and basically start attacking now all the highs? But to answer your question, right, I'm gonna see, let's go daily real quick. Let's hide everything so it's easier. My guess is you're looking at this daily fair value gap in here. Like this, which is valid. Right, I'm simply using the 4 hours because the 4 hours inside of that daily. Oh, so if I go like this, let's hide the indicators again. But within the actual daily fair value gap, this 4 hour fair value gap is a little smaller. Right, and it's more recent, which is why I'm using that. So in theory, I am utilizing the daily fair value gap. Right, I see that, and then I understand that the 4 hour fair value gap here is created as we leave that daily. So that 4 hour becomes my new area of interest because it's the most recent premium that gets formed as we're actually leaving the daily fair value gap. If that makes sense. Well, we missed that. That's okay. Overall, right idea. Right, so now we want to see, okay, are we going to continue to reach for lows? Or as we said, do we flip over? And to me, flip over, right, the flip point would be this bearish fair value gap that's right here. So as we leave this 4 hour fair value gap for the first time, right, first candlestick to close below it. We're now playing off of the RTH midpoint. That's what we expected price to reach into. And that's really all my objective was. So now this is a case where, like, yeah, we do have, right, like if we go to higher time frames, 1 hour fair value gap here. That could be our next objective if we're bearish. But if we're bullish, really the daily volume imbalance will hold us. So at this point, this is kind of where we have to just step back a little bit, reassess our bias. So our bias and our targets have been met. So now we wait and see, does price give us an indication that it either wants to continue to run for bearish inefficiencies and bearish liquidity, or is it time to kind of punish some people going short and take some highs? Because in theory, right, like, let's say that this original trade that we took here, or even up here, right, those highs have never been taken at all. So anyone that went short could still be holding short easily to target these lows. What we'll do, if we can close below the RTH midpoint, that to me is setting off a little more bearishness, and we actually will look to use that 4 hour low at this point as a potential entry target. If we don't just run, we might just run straight for it, right? There's that other daily volume imbalance. So far getting that bearish delivery. First presented fair value gap. Don't forget new day opening gap here as well. So yeah, this is a lot more bearish. Let's see if we leave that open. If we do, we're going to go ahead and go short there using new day opening gap to target the low of the RTH. Yes, I will, Max. A lot more on YouTube. Pretty much primarily on YouTube. at least for the time being. And then I don't know if I want to set up a premium group again, maybe do like weekend streams. I always like those weekend webinars just to go over things, answer questions people may have. Okay, a little bit of higher risk entry just because we're holding at a higher time frame discount in the form of that 1 hour. But the fact that we've gotten below new day opening gap, daily volume imbalance, midpoint of the RTH gap, leaving behind a premium, I like that as a entry area for us. So we're going to look to use the volume imbalance. If we can't tap it, that is overlapped with this fair value gap. Let's take away the indicators. Look how the volume imbalance is consequent encroachment of the fair value gap. That's why I'm using that fair value gap and that daily volume imbalance, because those levels overlap perfectly. We may get a situation where institutional order flow, however, we don't even get into consequent encroachment and we just run. Would be unfortunate, but I like this idea for a better entry here up here. I missed y'all too. I sure did, honestly. I like streaming. And you like the daily recaps? Okay. Then yeah, maybe I can start making those too again. I think we'll get back into just all of it. Forgot how much I miss just trading in general. Passionate about it. Staring at the charts. That's about as high as we'd want to see. As we said, we're allowing it to get all the way back up into really the high of it. But like this bearish fair value gap, I don't want to see be traded into. And the reason for that is because we've already balanced that area in price, right? So if some of you guys are wondering that, as we look at this, right, this is really the whole 4 hour fair value gap still, this shaded area. So when we create this original low, at this point, we've already repriced really into the low of that 4 hour fair value gap. So now as we start moving away, right, we're rebalancing now this price like that was left behind. As this low gets traded through, we really shouldn't come back up into here if we are bearish, right? That's why we see price kind of run away aggressively, because we've already really traded within this little area in price. Like if we look at that wick, right? Remember, wicks are gaps. So we have that overlapped balanced price range. That's right there. Which is why I'm okay trying to use the most recent one here, with the understanding if we kind of flip this and we get back above the daily, to me, that's more bullish in general, right? Overall, after clearing a lot of sell side. And now we'd start looking for some potential highs up in here to get cleared out a little bit. Because it's playing within that new day opening gap, right? If I bring back the indicators, you can see new day opening gap here, still around that regular trading hours midpoint. As long as we can remain below that, that'll set up the stage for bearishness. Once again, I guarantee you, right, we've probably stopped right at a quarter level. So if I was to drag that and go midpoint, yep, look at that, overlapping with the 1 hour, which is why we see price bounce right there. You can see price trying to hold below that. We can close inside the volume imbalance. I would prefer we didn't, but we'll allow that closure above midpoint. That's really when we kind of will cut it, right? Expect to be offsides, expect to be stopped out there. Ooh, yeah. So we invert that already right there. Not too good of a sign. Let's see if we want to hold midpoint. We've already hit, as we mentioned, a higher time frame discount, which means the retracement isn't surprising. If we're bearish, however, we want to see kind of that get taken out, maybe consequent encroachment. But if it doesn't, we'll just reassess where we're at. At this point, we would need this to be overtaken again, because now we're going to use it as support, right? The bullish inversion, bearish fair value gap turned inversion. As we said, don't really want to see price meander above RTH and midpoint. But it looks like we want to continue higher. Yep, notice how the bodies keep pushing, keep pushing. So as we said, we use that as an inversion for the stop out. Oh, not yet. Let's see if we get, oh yeah, we're gonna get stopped here. Right, so as we said, closure above midpoint to us signals offsides more than likely. So we've retraced into the bearish fair value gap that we really didn't want to see price come all the way back up into. We have hit that higher time frame discount. So we'll see what kind of closure we get here. Well, we actually didn't get, we fell short of that, okay. I want to see if we invert this here, to be honest. I wouldn't say untradeable, but I mean, like you said, it's a lot higher risk, lower probabilities, just because right, anything he says can be kind of taken a certain way. I've always been one to believe and still do that these things are already priced into the market, and that the news simply is a catalyst to send price where it was already right expecting to go. But yeah, it definitely makes it harder for sure as far as the intraday swings. Right, like this movement here, I mean, that's kind of a clear example. The fact that we went up and down through it, went up to midpoint, aggressive movement, and then had to make a final run before moving, just manipulation. We get stopped at the high, that's hilarious. Back into the inversion, so we're just watching that. We want to see now, does the inversion actually offer that and run us higher? Yeah, it's not a bad idea, Max, to kind of just sit on the sidelines, watch and tape read the rest of the day. So we do end up using that as an inversion, and now we've actually closed above the daily volume bounds. Notice that. So what my eye goes to now is immediately basically the midpoint of this most recent wick that we formed as we tap into that inversion. And we're watching to see, right, do these levels continue to hold us and accelerate us higher? Max, are you asking like in general, or like right now what I would need to see to look for bullish plays? Just so I know what you mean more, Max. When and how can I get as good as you with reading tape? I mean, the when will be, right, that's really more of a personal thing. Depends on how long you grind, but the how, I say, is just what we're doing here. Right, the hard thing with trading is there really is no shortcut. Right, there's nothing that you can really do to try to, we'll say, get ahead or shorten the process. You just need to be here every day and watch these candlesticks print over and over. And you can do as much, I guess, we'll say, reading or watching YouTube videos or even just like listening to ICT as you want, but until you actually put yourself in the market to where you're watching it play out over and over again, that's when the skill set will really improve. Like right now, is there something for you that would come from bullish? Yes, yes. So for right now, as we said, this is my attention. This is what I was looking at from the bullish order flow, in my opinion. As we leave that 4-hour fair value gap, we're leaving behind a bearish fair value gap. And it's already inside of a balanced range. So now as I watch, right, if we're going to invert this and try to basically trade back into the 4-hour fair value gap, in my mind, that would set up short-term bullish plays till like at least one of these highs that were left behind. Right, let's kind of clear out some of this stuff real quick. So like if we just simply look at this right now, we have highs that are here that could be targeted. We have highs here, 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 here. None of these highs were cleared out. So the same way that we said we have a phantom trend line here that eventually got traded right through. I'm kind of seeing the same thing here now for longs, to where people maybe that were in all these shorts are still trying to take this short, and they could be right. We could be offsides and we just blast right back through this into the original 1 hour. But I wouldn't be surprised to see, at least in the short term, a run for some type of high, because even in here we've yet to get a high. Yeah, so for me, bearishness went away as soon as we closed above this fair value gap, in my opinion. So now we look for the short-term bullishness. For us to kind of be reconfirmed to look for shorts again, let's say that we were able to aggressively get back below, not only the volume imbalance, but the midpoint, and more importantly, this Wicks midpoint, then we could try to get back on sides for the bearishness. Do I have a swing trading strategy? I mean, I guess it's more for options, but it's really just the same idea utilizing higher time frames, right? So like, so far, everything that we've been doing is really on the 1 minute. However, we have an understanding that we're using higher time frame reference points, but the executions and things like that are all taking place on the 1 minute. For trades that I'm expecting to hold for days or even just 1 day, I'm using higher time frames because those are the parent time frames that price more than likely will play out on. And what I mean by that is, all right, let's hide all this real quick. Like, let's say I was just trying to swing position overnight or multiple days. I'm waiting until these higher time frame PD arrays are traded into. So like for me, I could already tell you right now, if I was going to try to just swing something, I would try to do this. Using that 15-minute fair value gap to then eventually lead us into these higher time frame new day opening gaps or things like that. Hide all the indicators real quick. And you could really up that all the way, if you're a 1 hour trader, 4 hour trader, kind of all depends on the time frame that you want to look at. But yeah, if you're someone that works like you're saying, I would just try to rely solely on those higher time frames for now, because price will often respect those areas, and it's not moving as quickly. So there we go, as we said, unable to actually get below the volume imbalance, unable to even re-tap that midpoint, and now we're starting to accelerate. So we said I would look for this for sure. I mean, at least here. But yeah, my attention now is really just mostly on the buy side objectives that were left behind from the morning run. So that'd be like this, or this, or this, or this. And why am I expecting bullishness? Because if we simply were just to do this and kind of graph out the liquidity matrix, two sell side pulls versus 1, 2, 3, 4, 5, 6 buy side pulls that could be targeted. And that's after we have already cleared lows here, cleared lows here, cleared lows here, cleared a low here, cleared these lows over here. So we've already done so much sell side liquidity grabbing, running all these sell stops. As we said, it just makes more sense to now reverse on those people trying to short, people that haven't taken profits, try to punish them and run out a high in the short term. Which for us, we could try to actually get involved on that. So let's see, we're gonna leave a fair value gap right there. So at this point, I don't wanna see daily volume imbalance be traded to. Do we go back all the way up into the 4 hour? I don't know, but we'll try it. We can actually go 0.5% on that one. Oh, 0.05%. No. So now we'll try to take it back up. Basically using this here. Right, this candlestick here, first time we get back above the bearish fair value gap. So we've created the inversion. These next two candlesticks fully reprice into the low, repricing that inversion. And then this candlestick closes back above, rebalancing that inversion. So in theory, if we are going to remain bullish, this fair value gap should be done, and we should rely on the most recent one. We're still allowing a deeper retracement just because, right, we can't always be 100% accurate. But in theory, as we look at this fair value gap really should be done being used, and we should either just run straight for buy side, or if we're going to give a retracement, find ourselves being caught here inside of this bullish fair value gap. We have a month-old new week opening gap right here that we're getting stuck on. So I'm kind of hoping that that could send us lower, right? What I mean by that, let me highlight that. You can't see it on the chart, but I have it pulled up on the other screen here. So this little fair value gap is a new week opening gap from last month, March 16th through March 21st. So I was kind of hoping to wick into the entry and hold at the new week opening gap, but we may actually just use the new week opening gap instead. We'll see though. Oh, this was 316. Just so you guys can have an idea what I'm looking at as well. So I said, don't really want to use that. Daily volume balance, midpoint, we should be done with that. Don't want to see price get all the way back down there. We're done with that. Also, first presented fair value gap, which is why we're finding hesitation here. So I wouldn't mind holding first presented, wicking into the 1 minute. That's not an inversion though. But yeah, we may just hold new week opening gap, especially because we close above midpoint of that wick. We did, okay. Yeah, look at that. Closure above, holding, holding, holding. Okay. We may miss this entry, but I'm fine. We'll just watch. What time is it? 10:30. Would you ever trade options again? Yeah, I would for sure. I really was using that. That's mostly what I was using to rely on as far as most of the money. Those that were around, I kind of showed that options account. I had upwards of what it was like 188,000 I had in there. But as we said, it's been a struggle, so not as much as we did, but yeah, when I start doing that again, I wouldn't mind sharing some of those trades. Because usually those are all like higher time frame trades. So I guess you could say those are almost swing trades as well. What's up, Axel? As far as right now, the Discord isn't what it used to be, right? I'm kind of just starting on YouTube only, so it'll all be free streams on YouTube. The Discord may get going again, the premium. If it does, it'll be primarily used for what, like weekend streams. So I'll host like the weekend webinars to where you guys can actually ask questions and things like that. A little more in-depth question and answers. And then honestly, it'll be just so you guys can access me more. Right, to where if you're in that premium, you're just able to ask questions more frequently and I'll be in there. Rather than on YouTube, it's pretty hard to get a hold of me just because I'm not that good of following my social medias, to be honest. Yeah, we may not get that entry. Looks like it's just wanting to hold new week opening gap, which makes sense. If it does, then we know why. Right, as long as we understand what price is doing, we're never really too surprised. There's that perfect delivery in the buy side. We always like that. Okay, so yeah, as we said, this becomes our flip point. And we notice as soon as we get above that, we never get back below it. Wicks, sure, but right, wicks do the damage, bodies tell the story. So bodies refuse to get below it. We've accelerated now and cleared out that buy side. We still have some buy side left, however, but now I wouldn't actually want to see, right? So that needs to become a breakaway. New week opening gap has held us and accelerated us. We've closed above the buy side here, and now we've gotten back above that first percentage fair value gap. So if we end up leaving this fair value gap open, we'll actually try to go ahead and use this one now instead. Stop will be like below this candlestick. Entry will be on the first presented fair value gap. This is the first candlestick to get above it since this original move lower. Right, so now, what is this whole thing? Breaker, low, high, lowest low, broken, highest up close candles, bullish breaker aligned with first presented fair value gap, which it looks like we're going to present a bullish fair value gap there as well. So I actually do like that. So we're going to go like this, candlestick inside new week opening gap to target the high. Okay. There we go. Do I use SMT? Yeah, I do. Right, at all times, I usually have NQ pulled up as well on my other screen. Just to reference the difference in the highs and the lows. The highs and the lows. Yeah, let's see if we can get back into the 4-hour midpoint maybe. Cool. So there's a retracement. We'll see if we can't hold that and basically just accelerate. And we'll actually just go, I guess, low hanging fruit there. Midpoint of that fair value gap. Quick stop out. All right, that's fine there. So we're tracing into new week opening gap. Quick stop. Actually giving a deeper retracement. We'll see if we tap here. Right, cut right through that. Yeah, as we said, we like to be wrong or right quick, so that's fine with me. Do I use, wait, we should try NQ. Yeah, I'm down with that. We could do NQ if you guys like that. I'm always looking at it anyway, so I could always just put it on the main screen instead of using ES. Asian range. I mean, I know what the Asian range is. I guess I don't necessarily, like, I'm not looking at the Asian range too often. That's kind of just personal preference for me. Like, it's not something that I guess I keep track of. Not right or wrong either way, right? People like to use the Asian range, that's fine. I just have other things that I look at aside from that, I guess. So now, in my mind, we are getting pretty sloppy here. We're overtaking up and down through these PD arrays quite a bit. We held this consequent, we held that original consequent encroachment. So I want to see, do we try to retake the new week opening gap here? Because more than likely, we're going to leave behind a bearish fair value gap here. Yeah, we do. So now bearish fair value gap aligned with new week opening gap. Short-term high cleared, breaking structure lower. We're inside a 5-minute inversion for the first time. Right, this bearish 5-minute that was formed as we left the 4-hour, we've actually just retraced into. But look at all the wicks, right? A lot of wicks. So I'm really kind of watching this. Well, first presented fair value gap always, but this is the 5-minute. And then as far as the 4-hour, we can kind of hide that for now. Let's move that away. Cool. So our current PD arrays that we're really working off here. All right, fellas, hold on. I'll be right back. 3-minute break. Okay, we back. Where we at? Ooh, lame. Yeah, let's see if we can't get something here at 3 or at 1050, excuse me. We're not really leaning one way or the other at this point, to be honest. But you can kind of see that on the 1 minute, but like if I show you a 5 minute, even easier to see. Let me hide all of this. All right, so we clear this low, close below it. The bearish fair value gap can't hold us. We've traded above it, but you'll notice now as we run this high, just a wick as well. It's not really showing any force momentum out of these ranges. As we look at this, yeah, I still favor, I mean, we've cleared so much sell side. We have finally cleared this little external buy side here, but still a lot of highs left behind. Dun, 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 dun. Can a person determine the high or low of the day and then the PM continue in that direction? The high. Okay, if you're asking like, can you, I guess, pinpoint the high and low of the day? There's certain tools that allow you to do that, but right, you need to be pretty advanced if you're going to try to do that. If you're saying, can once the high or low has been put in, can you trade off of that direction? I would say yes, if that's more of the question you're asking. Right, so like when we get into the PM session, if we were to just take a look at basically the highest high and the lowest low that had formed prior to that and try to find one of those to target, that'd be a good way to do it. Because at that point, right, you're going to have a lot more price action to rely on. And more than likely, there's going to be some type of price movement that will give an indication of if price wants to either attack highs or attack lows. And even if it doesn't clear the highs, it just needs to draw into those areas. I think that's what you're asking, Bew. You may have to refine that a little more if I didn't give you the answer you were looking for exactly, but... yeah, see, this is hideous in here now. So it's starting to just get pretty ugly. A lot of back and forth. Right, notice wick, 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 close above, close right back below. So not really respecting PD arrays. We did leave a bearish volume imbalance, so that does have my interest a little bit. Right, like maybe we do want to come back all the way down for that. Only issue is we have so many PD arrays at this point. All right, so we're still really, oops. Let me get the daily on this. We can't forget the daily volume imbalance. That's always going to be kind of number one here. I still want to have this just so you guys can reference, right? The midpoint is going to be important. Where have I been? That's a good question. I've just been grinding, brother. Been nowhere really. I mean, I move quite a bit every 3 months, so we've had 2 moves in the last few months. But mostly, yeah, just grinding in silence. I've been learning how to code a little bit. I want to kind of create some websites, so I've been spending some time on that, learning a new skill. Which that shit is hard, so it's been a grind. A lot of brain power going into that. Yeah, I got back into watching some YouTube. I saw some streamers pop up and I was like, dang, I forgot I used to do that. I like that. Long time no see, right? No, it's the opposite. Top, how about losing everything? No, for those that were here early on, where I explained, had some untrading related issues, which then led into poor trading mistakes, right? Which then leads to, of course, feeling a certain type of way, trying to make it back. Just snowballed. I guess they would call it full tilt. First time. Fully tilted over some goofy stuff. Right, and just kind of snowballed that into more bad decisions. But yeah, that's part of life, man. Lessons to be learned. I think I got a little too complacent with where I was, for sure. And I stopped doing the things that made me the trader I was in the first place, right? And I think that's kind of happens with everything in life. You grind for so long, then you plateau, and you stop putting in the work that you put in to get to that point, and it'll have a way of humbling you for sure. But we back, right? I know I'm a good trader. I obviously know I have the skill set, so it was never that as an issue. Just more so the discipline. But yeah, we back. As you said, added a few more 300Ks to the account, so we'll just using those. All right, 1050. Let's see, 1050. This is some real ugly price action. Dang. When did you come back? Yesterday, or when? First day of Monday? Or, I mean, I guess the trading. I've never stopped fully trading, if that's what you're asking. But back to streaming, yeah. This is the first week. How much time do you? Only about 2 months, honestly. Like I said, I was still trading in between that time. Not the best trading, that's for sure, but I took about a 2-month break to really focus on coding, right, and programming. And then I got back into trading. And then when I did that, I was like, dang, I forgot how much I used to miss trading and streaming and things like that. I think it's just a good skill set to have, to be honest. Especially with, right, the way things are moving to everything digital in the future. I feel like coding to me is just another language, right? It's a computer language. So if you're able to learn that and you can do things on the computer that others can't, it just opens up other opportunities. And personally, for me, I wanted to do it because I want to build a website, right, that'll allow me to almost track all my trades. I would say like TradeZella is a good example, but not necessarily that. So when able to build something like that, I have to learn how to do it. It'd be full stack so far. Sounds good, Max. Yeah, you guys can bounce, honestly. We're about to wrap it up here. 1050. All right, a lot of nonsense. Honestly, though, we may try one more. I just want to see if we can get... Right, we're clearing so many lows in here. I just want to try to catch one run higher here. Look at all these lows getting wicked. Every time it's a wick, too. If we close above that, we'll try one final. Honestly, I like that. Hard thing. It is a hard thing, that's for sure. Just a lot. Just like trading, though, honestly. Right, you got to learn the language. Then you got to apply the language. You got to practice applying it. So we're back inside new week opening gap. So many lows. 1052. I don't mind trying one more. If we leave a fair value gap here, we'll try one more before we leave. Just tuned in. Do you trade full time? I guess you would say that, yeah. Like, I don't have another job, I guess, if that's what you're asking. Okay, we'll try one more here. 40%. To get up into the highs finally. Right, kind of hide it just so we can see what exactly we're working off of. So a lot of wicks, right? 1 wick, 2 wick lower, 3 wick lower, 4th wick lower. Acceleration, fair value gap left behind. This candlestick is able to close above. So we're trying to use basically the 5-minute fair value gap. Oh my, it looks like we're about to go straight through. Oh wait, did we get stopped? Okay, that's our sign right there. So overall, hideous last really half hour. Right, we catch the initial shorts here, partial. We add, we get stopped slightly in profit. Small loss here, and now this loss here. So really overall, right, break even, we end up giving back the profits that we made earlier. But as long as we can walk away, break even, I'm okay with that. Yeah, that is just hideous, jeez. So what we end up doing, right, is we end up using the new week opening gap instead, and we actually are able to get into that sell side we were looking at. So the original objective kind of this low, a lot of wasted movement to get there. But as we said, kind of expected that, right, with Trump yapping away. Even if we have objectives, price, the movement into those objectives can be pretty ugly. Not many people remember the True Link days. How do you know that? Wait, what? I'm like, how would you know that? Where have you seen that at? That's funny. Hey, no problem, Bert. Yeah, that'll be it for us today. Break even on the day. Honestly, pretty tough price action movement. We understand what we're reaching for, right? So we're never necessarily confused in what price is doing and reaching for. Just a matter of how it gets there. So instead of using all these, let's kind of back this out here. Right, we were looking at this as all these lows being cleared to set up a run higher. Instead, we're engineering, right, liquidity. We run back up into that actual bearish fair value gap here. And then we finally get that sell lower to attack the 1 hour that we were looking at. We'll see if we get into the low, right? We wanted to see maybe the low of that new, or the RTH gap potentially. Oh shit, okay. That's wild, G. Yup. I forgot about that. That's hilarious. The OG Discord, that's where it all started. Damn, that's actually crazy. Hey, I'm glad. That was like my first intro to streaming. I forgot about that. That was honestly kind of sick. We'd all just hang out in the mornings and stuff. That's really why I wanted to make my Discord in the first place. I like that sense of community, especially if you guys are all working towards the same goal. It's good to have others just be there to encourage. Zeusy, yes sir, my boy Zeus. I wonder what he's up to. Haven't talked to him in a little bit. I know he had his own group that was doing pretty well. Gee, hell yeah. He was always good at that though. He was good for like the marketing, and he was built for online presence. See, my issue is I'm a little bit older, not even that old, but I guess, more introverted. So trying to create a persona has always been a little difficult. But hey, people like the personas. That's all right. I'm more so of keep it straight up, right? Just talk about what I talk about and grow it organically. I just kind of wanted to see if we want to use that volume bounce again. We'll wait till about 11 o'clock and then call it a morning. Hide the indicators for now. Over the midpoint, back to the daily volume balance. Keep on going, G. Hey, hell yeah, man. Yeah, the first payout's always huge. But those are always some. I think getting the first funded account, that's a good milestone. First payout, good milestone. Second payout, that in itself, that's the biggest milestone, to be honest. Yeah, look at that movement. That just means you're improving then. Hey, as we said, right? It just takes time. As long as you show up every day, you'll for sure keep getting better and better. And you'll get more comfortable. That's a big part of it too. At least like for me anyways, I always tell a story of when I first got my first funded account. It's almost like I forgot how to trade. Because then, right, it went back to being, oh, I could actually make money doing this. So you just need that repetition to where now I could care less. No emotions, regardless, either way. Ugly. Yeah, I use that. I like that one. I think that one is the easiest to see. Of course, I've kind of expanded on that, right? But I would say that's almost, yeah, it's just one of the easiest signatures to see, right? Like right here already. If you're on sides anyways, like here, of course, we're looking to go long, which is why we got stopped. But if you're going short, right, YouTube model right there. Short-term high cleared, displacement through a low, retracement into that low to target liquidity. I think that's like the most basic and easiest model to learn for anybody. I also like my volume imbalances though. I'm a big volume imbalance guy. Okay, well, yeah, price is being boring here now. So we end up clearing out that low that we were speaking of as we send a little bit uglier delivery into it. Up first to clear out the buy side, and then a lot of wicks lower before eventually returning into new week opening gap. I mean, look at that delivery. That was paired with the bearish fair value gap here. Before huge wipe right into sell side. And now after clearing the sell side, consolidation heading into 11 o'clock. So yeah, that'll be it for us today. Let's see. We're going to check news real quick for tomorrow. Kind of move all this. How do I? Oh, right there. FOMC. Okay. So just FOMC tomorrow. Or, I mean, not FOMC. What the heck? Fed. Yeah, we'll have a stream tomorrow. Same time. We have CPI next week, so that'll be a pretty interesting week. Look forward to that. But for now, we will call it a day. Appreciate y'all hanging out. And we'll be back tomorrow, same time, 9:25. So see you guys then.